Welcome to the London Property Podcast, your trusted guide through the complex and ever-evolving world of London real estate. We help clients manage, protect, and grow their property wealth by connecting them with the right expertise from finance, law, and tax to construction, design, and strategic advice. Through conversations with industry leaders, we bring you clear, practical insight into the trends, challenges, and opportunities shaping the market. Let's dive in.
Welcome to London Property. I'm your host, Farnaz Fazaipour, and today we're doing our market updates for the first quarter of 2026, and we're delighted to welcome back to the show Kris Ericsson. Welcome back.
Thank you.
Kris runs his own agency, and he has a lot of experience in the prime central London market, and I'm going to hand over to him for what's going on in the market today.
Yeah, what a time to be picking a market update with all the uncertainty in the macroeconomic world. We are in a transition at the moment, I believe. It's very much a buyer's market out there. There's no questions about that. One of the things we've noticed is, in terms of pricing, is that we are now just under 25% below 2014 levels on prime central London properties, and that's an average. So areas like Belgravia and Knightsbridge, they're down 30% since 2014. And other areas around prime central London are around 22, 23. That is a massive shift. That's a quarter of the value. So in a market where we normally see sort of double growth every 10 years, we're now looking at 25% off 2014 prices. And that's a big hit for a lot of property owners to consider. With the lack of supply coming onto the market, is an interesting situation because the lack of supply would normally dictate that property prices would start going up. We've had 2 cumulative years now of a lack of supply. And I think that if the supply doesn't start increasing, then maybe this isn't the time where we sort of wait and see as a buyer, but we start making a move. So I think the market's going through a correction. It's a gentle one, coupled with the fact that 68% of prime central London sales last year were from non-doms, relocating to Abu Dhabi, Dubai, Monaco, Geneva. What's going on in the Middle East at the moment, you'll probably see a lot of that sort of coming back into the UK. But whether that translates to property purchases or rentals for a short period of time, maybe a year or two, we'll still see what happens. But we're starting to see more people coming back into London, and that's why I'm saying we're starting to see a slight correction. Also, Americans, Sotheby's released a report talking about the influx of Americans. I wouldn't say that we're all flooded by American buyers, but there certainly are more American buyers in the UK, and that's because of the uncertainty in the US with Trump's policies and everything else. So people are mitigating their risk holding US assets and moving into Europe. So there's a lot of change happening at the moment, and it's very fluid, so it changes day to day.
Yeah, that's a very good analysis, actually, what you just said. I have my own opinions about why I think the market has corrected, but what do you think has caused this 25-30% correction since 2014?
That's a very good question. One of the things is, of course, interest rates haven't gone up. Recently, as recent as this week, so today's Wednesday, Monday, they said HSBC had just made 10% of their global workforce redundant, citing AI automation. But the reason I'm mentioning that is because it's financial industry linked. And what was it, 500 mortgage products came off the market. So there's less availability to capital, for one. 2, the cost of buying properties in the UK, particularly in prime central London, is huge in comparison to the other cities we just mentioned. And I think a lot of people don't understand, and that's the real link between, say, Dubai, Abu Dhabi, and London, is that back in the day when we were trading, 2013, 2014, and there was good volume in the market, it was relatively cheap to buy property in London. In comparison to the loan to value, in terms of the mortgage products. And also the idea was that you were going to see capital appreciation, right? So you can buy an asset hold it for 2 years and sell it at a profit, stamp duty, taxes, everything else has been cleared. Since 2014, that hasn't happened. The value of the property has, in nominal terms, gone down, and the cost of purchasing property have gone up. So it's forced the sort of price correction to happen. As an agent myself, there's no questions that in 2014, I remember looking with my business partner, Matt, and just thinking, this can't continue. You can see property prices going up from, £2,000-3,000 a square foot in Mayfair up to £7,000 a square foot. And then more sort of suburban areas like Battersea, for example, hitting £1,200 a square foot in areas that traditionally traded at £600 a foot. It had to stop at some point, and it did. It's just that the market didn't correct itself because after 2014, we had Brexit in 2016. It's 10-year anniversary coming up now next month. That hasn't fixed itself yet either. We're still so uncertain on what's happening there, coupled with everything else that's going on. So it's taken a long time for the market to correct. Normally it sort of corrects in a year or two, but this time it's taken over 12 years to correct itself.
Very good points. And do you think that we've actually reached a point where it can't go down any further, or do you think there's any reason for it to carry on with a bit more of a correction?
I think the correction has to continue in reality because these are headline figures. So when you look at how many transactions have sold versus what's on the market, that's a very different picture, right? Transaction volumes are way down in comparison to what's actually on the market. Where it hits, well, the super prime properties. I think I read an article published by Beecham Estates saying that they foresee almost 30% more to come off the super prime market.
The super prime, so they were sort of over 10 million.
Over 10 million, yeah. And that's understandable because you take on an asset at £25 million. Is it worth 25 million? There are no comparables. It's much more of a gut feel in terms of, it's a trophy purchase or a family purchase. So if you list out 25 and it sells at 15, it's probably still profit for the owner, but it looks like a huge percentage drop.
Yeah.
Where the market has to correct is in London, because some of these figures won't translate into the nationwide, but it's between 1 and 2 million. That sort of market has to correct, and it hasn't yet. And the reason it hasn't is because people can't afford to take that hit. They're mortgaged up to 60, 70%. They can't afford to sell it below that because they'll end up owing the bank by the time they sell the property.
Right.
But we had a property in prime Chelsea. This was beginning of 2025. It was a 3-bedroom, second floor walk up with a roof terrace in prime Chelsea, and they paid 2 million for it in 2014. They wanted to reclaim that. Once they worked out taxes, stamp duty, it was 2.15. We put it on the market. We managed to hold instruction for almost 8 months, 3 viewings.
Wow.
Or should I say 3 inquiries. We brought people to it, but 3 genuine inquiries. That's it. So what's that property worth? And we had the conversation, probably thinking 1.5.
Wow.
But they couldn't afford to sell at 1.5. So it comes off the market. They either rent it or they continue living in it. And that sort of gives an onus to the lack of supply coming onto the market.
I was going to say, so that's why the lack of supply is coming from.
Yeah.
And I guess in that price range, you're going to add another layer of complication to the 2028. Is it 2028, 27 when they're going to have the mansion tax?
Yes, correct.
For over 2 million.
Yeah.
How do you think that's going to affect the market?
Very good question. I think, well, the mansion tax exists in the US, so you can just go across the pond and have a look at how it impacts there. People often forget, we look at London as being an expensive place to buy now in comparison to the likes of Abu Dhabi and Dubai. But you go and buy in New York, for example, you've got not just local taxes, you've got federal taxes, you've got mansion tax, you've got communal taxes. The actual amount of money spent on purchasing a property in New York, for example, is way above that of London. The only difference is I think you'd see more capital appreciation over there, which is why transactions still take place. But I think the market absorbs that. Again, the market has a tendency to absorb all the costs. It just makes the property slightly more illiquid. And it takes longer, you have to hold it for a longer period before you can see any appreciation in value.
Yeah, I mean, definitely the days of flipping property in prime central London are completely over.
They're finished, yeah. I couldn't agree more with you. Yeah. I mean, we had people, I remember when the Golden Visa came out in 2014, I think it was, a particular visa for, back in the days, for the Russians, I think it was. And they would be buying property at just under 2 million to be able to sort of get their Golden Visa. And then they'd be selling it 6 months later, 2.2, 2.3. I mean, we handled loads of transactions like that.
It was almost like whenever somebody sold something, the next guy could get 10% more.
Correct, yeah.
And
but that is long gone. That is long gone. And I think that's also disappeared because of the amount of volume of stock. Even though I'm talking about supply of stock, if you think about Nine Elms, you think about the redevelopment of the river, the thousands of units that have come onto the market there has slowed down the ability to be able to sort of transact numerous times on an asset within a certain period of time.
There's too many of them.
There's too many of them. Too many similar products as well.
I'm going to ask you actually about the river because obviously, you gained a lot of experience working on the river. And, the way I look at it, and I'm just looking at it kind of, from the outside, that whole power station is almost bringing affordability to people to be, in prime central.
Yeah.
and it has a lot of. Is it busy? Is it getting filled up? I mean,
yeah. I mean, Battersea Power Station is a unique example. I'd separate Battersea Power Station from Nine Elms, just because even though they're neighbouring areas and they have similar stock, the Battersea Power Station regeneration project is a multi-billion-pound project. So they have, what should I say? They've created an environment within their own development which is unrivaled by anywhere else, particularly including the shopping centre itself, right? So it's bringing people through commercial enterprises and everything else to the area. It was also relatively cheap to buy in there in the first couple of phases. Phase 1, 2, and even 3 were, phase 1 and 2 were sub 1,000 a foot. Obviously, now the later phases are 2,000 a foot, and those sales are slowing down. But they're the sort of prominent ones within the power station itself. Yeah. But it brought a lot of people into the area. And also, modern living, that's what the Riverside is about. And if you translate that into renting, for example, a lot of owners bought those as investment properties, and they rent fantastically well. So they've got a great return on their yield asset there.
It's really, I have to say that I always compared it in my mind with Canary and wondered, is it going to take that long to settle? But it's actually been pretty quick.
It has been pretty quick. And of course, the difference between Canary Wharf is that there was nothing there. Yeah. And come 6 o'clock on Monday to Friday, there's nothing happening there either. Yeah. Whilst here you are on the doorstep of Chelsea. Yeah. You can just cross the bridge and you're in the hustle and bustle.
You're listening to the London Property Podcast. We help clients manage, protect, and grow their property wealth. If you find this conversation useful, don't hesitate to get in touch. Now, back to the conversation.
Now, what would you say in a market that we're in would be good investment idea for somebody? What would be, if you had to advise somebody, okay, why would I invest in London right now?
Good investments are property assets that have a real reason to be occupied. And let me just sort of go down that route. Trophy assets are not a good investment. They're bought for vanity or for a family to enjoy their own sort of luxury, if you like. Your sort of 2-3 bedroom masonets, there's a lot of those. As a matter of fact, I saw a stat recently saying that the pied-à-terre market is coming back in quite a strong force. And the reason for that is because companies are starting to force people back into the offices.
Right.
So the idea of being able to work from anywhere in the world and work from home 5 days a week. Most of us work 7 days a week, but 5 days a week, that's coming to an end as companies are finally starting to push people back into the offices. And that creates an appetite for a lot of people to have pied-à-terre. So potentially 1 and 2 beds could be very, very interesting purchases as we move further down the year. The only problem is that there's quite a lot of volume of those properties. So you have to be careful what you buy. Yeah. And if I link that back to the river in respect to new build properties, we always said with new builds, Matt and I, we always looked at certain buildings depending on where they were situated, what the aspect was, how high up we were, and we could assign a percentage increase to various values. Because if you buy a 2-bed in Battersea Power Station on the 3rd floor, you're one of 60.
Right.
What's the incentive? Why would someone buy that flat? You're competing with maybe 10 other properties on the market that are identical. Right. So it's a race to the bottom. So that's not a particularly good investment. You want something that's slightly unique, pay slightly above, the sort of average market price for it. But if it's got a view straight onto Battersea Power Station or onto the river or onto Battersea Park, then it has a real selling feature. And those will always have a high appetite for.
Have you noticed more demand from a certain part of the world? I mean, is there a nationality that you're noticing are focusing on London property at the moment?
To answer that, I'll do it in reverse. I can tell you who's not buying in London at the moment. The sort of Middle Eastern buyers that used to come here in quite large droves, buying in Knightsbridge and Chelsea and so forth, they're no longer here. They're investing now back home in their own countries. And that's why you're seeing 30% drop in values in Knightsbridge. So that's quite understandable. The Sotheby's report talking about Americans, I think it's more domestic buyers. That's really what it is. It doesn't have to be necessarily homegrown British buyers, but it's people that have a reason to live here and who work here, who have children in school here. They're the ones that are sort of pushing the market along at the moment. So less sort of speculative buyers and more real buyers who are looking for a reason to live here.
Yeah, which is probably all the reasons for the changes that the government have made over the years, is to be able to get the domestic buyers back on the ladder and stop making property so unaffordable for them. So that would make sense. So Would you say that London property is still a safe haven, or do you think we're competing with a lot of other places now?
I think London is competing with a lot of other places now because of the ability to be able to work and move and everything else. But London, for all its negativity, particularly around safety, I mean, I've lived in London for 25 years. Every big city has its moments where it's slightly unsafe to be in and so forth, but I wouldn't say it's as bad as what's being portrayed out there. I think there's a sort of, there's an element in social media particularly to portray London as a very dangerous place right now, and I don't think that's genuinely true. I've certainly not seen it or feel it either. So, you know, we're governed by a legal system that is as old as England itself, and that's something unique to Great Britain. It has some of the best universities and schooling and education sub anyone in the world. It's the financial capital of Europe. There are many reasons why London will always remain a major central hub.
Yeah, no, I agree.
And also the biggest thing, the time frame. The fact that we're on GMT time, meaning that you can work in London, communicate with America later in the evening and Asia in the morning, and that's unique to the UK as well.
Yeah, all very good points. Have you noticed a hotspot? Is there a place where you say, yeah, I could comfortably say that would be a good place to invest for the next 5 to 10 years? It would have opportunity.
Yes, and it's not a new area per se in terms of where people have discussed this before, but Matt and I recently had a client whose property we sold in Battersea, and she was looking to acquire a property for a family member and retained us as agents. And this gentleman wanted to live in East London, which meant trekking around East London and learning that market. And boy, is it fluent. Now, this is sub $1 million for a 2-bed, so between 800 and 1 million. And most of the properties that we saw in the first week had interest in the second week.
Yeah.
So it was unbelievable because I thought that's how the London market used to be. And I was completely unprepared for it. I was saying, so sit back and wait, etc., and then calling the agents back up again and say, yeah, we got 2 offers on it, or that's gone under offer. And I thought, what?
Yeah.
So it's a very fluid market. And I think the younger generation, they like it because it's, it's very much in the heart of London. It's slightly edgy, but I think the younger generations quite like that. And it's very much up and coming in terms of new developments being built there and transforming. And it's got the clubs, and it's got the bars and the restaurants and the cinemas, and it appeals very much to that generation. So I think if you're looking to buy somewhere in London, have a look in East London.
Yeah, it's interesting because I've asked that question from other colleagues that I've spoken to for this market update. And originally, I started having this feeling a couple of years ago because a couple of my friends' children started saying, I don't want to live in Cranley Mews anymore. I'm going east. Or I don't want to be in our penthouse in Notting Hill. I'm going east. I was like, what's wrong with your children?
Yeah.
And then, you start to see that actually it is a real thing. And as you say, I went to look at something over there to buy and fix.
Yeah.
And I said to the agent, well, how long does it normally take if we were to buy this and fix it and sell it? And she goes, well, usually goes the weekend it comes on the market. And I was like, what?
Yeah.
Are we in the same town?
Yeah.
So it really is settling as the next new hotspot. Just finally, because I think we've all had this happen to us, but are you seeing a sort of London-Dubai debate going on about where to buy here or there, or
yes, and
that London to Dubai thing?
Yeah, absolutely. It's the most talked about thing in prime central London real estate, I think. Suffice to say that a huge percentage of our own clients have diversified and moved over to Dubai as well, which is devastating to us, I guess, unless we have a connection in Dubai where we can help transact over there. However, what I'm also hearing on the ground from colleagues who have moved out there, as many have, is that sure, the new build market is very transactional and very hot at the moment. And let's be honest, Dubai is obviously a very safe place, but it's also made the entire legal process of purchasing very simple. As a matter of fact, I spoke to one colleague who you may know, who said that they've got cash points in some of these new build show homes where you can take up a maximum of $2 million. So it's prime to sort of purchasing on the spot.
Can't get any easier than that. Okay.
But from those that live in Dubai, of which we have clients who rave about it, of course, is their home country, they are struggling to sell their own assets. So if it's new build home, so new home that they're buying the first time round, very, very fluid. If they're reselling something, less so. So that
Right.
market is also starting to...
Get
And now,
saturated.
exactly. And now with everything else happening over there, I think a lot of, particularly Westerners who came out there for a better way of life are rethinking what they're going to do next year.
What they're going to do next year.
Yeah.
I mean, it feels like there is a lot of devotion and dedication to Dubai, so people might ride the wave and get to the other side.
That's exactly it. And so I'm cautious about sort of saying, I've seen the reports and I've heard people saying, this is great news for us as agents in London, everyone's going to come back. It doesn't work like that. And that's why I sort of mentioned earlier in this conversation that it's the cost of purchasing in London versus Dubai. That's the real killer.
Yeah.
When you factor in stamp duty and everything else into it, it's much more transactional in Dubai. So it's still an easier and cheaper way forward, pound for pound over there. And that will hold value. And Dubai isn't going to go anywhere. It's going to go through its own bubble as well, but it's nothing like the last sort of crash that you saw. Although one interesting thing about Dubai, of course, being in the Middle East and being a Muslim state, you can't go into debt.
Right.
And I have come across a few people that have had to relocate due to coming into debt over there. So
Right.
that's quite an interesting thing. So they sort of had to move immediately. And they've gone to various places like Cyprus, Monaco, and Geneva, which I mentioned earlier as well. So
Yeah.
let's see. It's not just London that's having its moment either. It's other places as well.
And I guess people are going to get it right in other places and learn from our mistakes
think
here,
so,
right? So like the whole non-dom thing, we've already seen Italy has realized that 100 was too little, 200 was bringing in too many people still.
Correct.
Now they've gone up to 300 apparently since January. So, I think it kind of, what's going on in the world at the moment is teaching us that there's other things to consider first before thinking only about money.
Correct. Yeah.
And that's probably going to make people be a bit more level-headed. And hopefully our government's going to say, well, let's make things a little bit easier for our local hard-working real estate people. They've had a long time of one thing after another.
Yeah.
Well, listen, it's great to have you back.
Absolute
And it's always a pleasure to speak to you.
Likewise.
If you have any questions and you're looking for specialists in this market, we collaborate with people who can answer your questions and help you and your family with any of your real estate goals.
Thanks for listening to the London Property Podcast. If you'd like guidance on managing, protecting, or growing your property wealth, get in touch. We're here to help. And if this episode proved valuable, share it with someone who takes the market seriously and make sure you're following so you never miss an update.